Dhiraj, Sachdev, good afternoon. Thank you for joining us. Everybody knows the concerns, whether it is liquidity, slowdown, or what's happening in the world in terms of economic growth. So no point in talking about what markets know, which is the concerns. What I want to ask you is that how much of the known factors are in the price?
Yeah, good afternoon, Nikunj. Hi. I think well asked question. A lot is in the price, if I have to say. But let's get a perspective. There has been unusual market behavior in the last few days. Despite corporate tax cut, when the market rallied by about 7 to 8%, it has given up virtually 50 to 70% of the entire rally in the last few days itself. Now, let us not underestimate the landmark decision on the part of the government to reduce corporate taxes, which is transformational and it's once in a lifetime kind of an event. This will not only eventually lead to earnings upgrade, but also improvement in the investment cycle. India stands obviously more competitive versus many Southeast Asian and other emerging markets to attract global FDI. But obviously this has to be supported by overall ecosystem in the form of ease of doing business or land and labor reforms to generate manufacturing sectors coming into the country. But the impact is not just Nikunj, on a one-year basis for the corporate sector. This is over the life of the business cycle as far as the tax saving is concerned, which means that the cash flows can actually be used for paying dividends, buybacks, or corporate expansion, or if the NBFC who has witnessed a tax cut can also offer more disbursements or credit as far as its balance sheet is concerned. In some cases, it can be passed on by some of the businesses where they are facing pricing pressure or demand issue, and we already saw the largest car maker and largest two-wheeler maker resorting to price cuts after the corporate tax cuts were announced. Now, from your specific question on how much is in the price, if you look at the broader market in general, I think there has been a kind of lack of breadth. It is offering a lot of bargain opportunities. There has been exaggerated reaction, especially in the small and mid-cap side of the market, where most of the companies, or many companies, and I'm talking about say fairly decent, good quality businesses are available at 8 to 10 times their sustainable cash flows. Or even in some cases, mediocre businesses, and the smaller that you go in terms of micro cap curve, are available at 3 to 6 times their earnings multiple. Now, so long, so that means that there is a lot of negativity in the price. So long we believe there is no existential threat or prolonged stress in the balance sheet, these kind of phases do not typically last long, because we believe that the potential for the mean reversion is high, and the potential for many of these businesses is far higher than the current state of affair. Now, from the message from the finance ministry is very clear that they will do whatever it takes to pull the economy out of the current slowdown situation. And we believe there will be more to come, whether it will be in the form of strategic divestment or privatization itself, which is being now most talked about event. Privatization alone on non-public sector, non-financial PSUs, the government can fetch close to almost 10 lakh crores. So, which is enough for the country to meet its social and infrastructure spending. So we believe series of such steps are in the offing as we move forward, which will gradually revive the confidence and sentiment in the market.
Are you on insurance stocks? Do you own anything? Dhiraj, where exactly are you on insurance stocks? Do you own insurance stocks?
Nikunj, since the mandate of my fund is small and mid cap, obviously these are much larger companies, and while there is a durability of the business for many of the insurance companies to sustain because of the under penetration that Anand also mentioned, at this point in time our focus is on some of the select private banks and NBFCs compared to insurance, which have been mispriced. So the relative attractiveness of the valuation versus insurance is higher now in some of the specific NBFCs and private banks that we own.
All right, we will be having the top brass of Infosys as well, detailing their outlook on earnings. For now, the stock perched at 803. What's the outlook, Dhiraj, for the overall earnings season? Are we going in with fairly somber expectations, given the fact that we could only see the impact of the corporate tax play out in Q3, perhaps with a bit of a lag effect?
Yeah, so we are actually entering the season with somber expectations. So any negative results will also receive muted reaction, except for a knee-jerk reaction. We don't expect a severe punishment from here on if the company disappoints. But obviously, autos will have pressure on the earnings because of lower volumes and margin pressure on account of higher discounting. You may also see pressure on the metal companies because of weaker realizations and lower volume growth. On the other hand, we may still believe that few of the private banks will deliver above average earnings growth in terms of pre-provisioning profits, though the incremental slippage deceleration is not yet playing out. Cement companies will obviously report positive numbers on the back of price increases or realization improvements. We may also see media entertainment on account of higher footfalls in multiplexes, or step up earnings improvement on account of implementation of new tariff order, which improves the subscription revenue for many broadcasting companies. I think these businesses will do well as far as the Q2 earnings is concerned. But you're right that we are, as it is, entering a muted earnings expectation, and the corporate tax cut will actually start happening even from this earnings season onwards. Not necessarily they'll wait it out for 3Q. There will be some tax reversals as well of those companies which have paid excess taxes in first quarter. So yes, we might see some kind of earnings upgrade happening on those who are benefiting out of corporate tax cuts.
Dhiraj, appreciate your time. Glad you could join us.